what I really want is for like Lombard's Bitcoin infrastructure to be viewed on par with native Bitcoin. Obviously, we've gone around and talked to a lot of these LPs, but I can only talk to so many people at a time. Ledger being able to talk to 1/5 of all Bitcoin instantly is pretty crazy. So the Ledger Live app is such an incredible. I mean, I don't think there's a greater opportunity. There might not be a greater opportunity within crypto to to distribute capital on chain into yield sources into different on chain products.
You saw the thumbnail, Jacob Phillips. If you don't know who this guy is, this is going to be a fantastic episode, because what he and his team at Lombard Finance have done over the past 2 years is really unprecedented in the Bitcoin space. They have a protocol that reached multiple billions in BTC. They launched one of the first yield-bearing Bitcoin tokens, so you can go and deploy it into DeFi, and while you're doing DeFi things, you can still earn yield the entire way. They've done some big partnerships with acquiring BTC.b, one of the largest BTC wrappers on Ethereum and AVAX. And they just announced a partnership with Ledger to do Bitcoin yield in the Ledger app. So let's jump right in. I cut this so that we jump straight into me asking him a question of his background, and then we'll be in the episode. So enjoy this fantastic conversation with Jacob Phillips, the co-founder of Lombard Finance.
I am the co-founder of Lombard, CEO. Before this, I was working on a DeFi perps protocol for a couple of years with a couple friends and close colleagues of a venture firm that I worked at right before that. So before I was working on that perps protocol, I spent 3 years at Polychain as an investor and partner on the ventures team. I did a little bit of governance work there. I spent some time in the liquid fund. Before that, I was in school. First job out of school was in crypto. I've done it ever since. I think I'll be in it for the foreseeable future.
Beautiful. Okay, I want to unpack some of those in a little bit, but I want to jump into something that's, you had a blog post maybe a year ago, maybe a year and a half ago, about it was a 1-year retrospective on Lombard. And there's a line, I think towards the bottom, where you say that instead of trying to bring people to an ecosystem, which is what most wrapped versions of BTC end up trying to do, and it's a hard sell, you just went first to looking at where all that on-chain activity is and tried to deploy BTC there, which is so obvious in retrospect, but people had not really done it besides maybe BitGo. So I kind of want to get into the early idea of starting Lombard and some of the design decisions that went into, even something as small as that design choice.
Yeah, definitely. Well, I think it stems from who we were as a team and what we were good at, frankly. Our alpha was that we were DeFi guys. I spent all my time at Polychain researching DeFi. I was working in deep pockets of DeFi, building a sort of morpho for perps for quite some time before that. We knew DeFi really well. We just figured out kind of at the right time exactly how to apply Bitcoin into that piece. So Bitcoin had been such an obvious opportunity, I think, for quite some time. I mean, all of DeFi is $100 billion. There's a $2 trillion asset of crypto native collateral that we could bring into the ecosystem. Of course, everyone's trying to, figure out ways to do this. Think about what a Bitcoin L2 is. So all sort of existing approaches or prior approaches pretty much were predicated on the idea of we need to build a Bitcoin only ecosystem. What this usually looked like was two things. It was a Bitcoin bridge connected to an EVM pallet. I think that our main realization was just you can disconnect the two. Why does this EVM pallet need to be the only chain connected to that bridge? Imagine if you built the exact same bridging infrastructure that you were using to connect to Bitcoin L2 and applied that to any chain or ecosystem. And really, I mean, I don't think this was some crazy insight on our end. To us, this was obvious because it was where do people want to use Bitcoin? Well, they want to use it in the best applications. They want to use it on Aave and Morpho and Camino and Drift and Hyperliquid and stuff like this. They don't necessarily. I think one of the things that's always been most challenging about building your own ecosystem is convincing the best developers to come build within it. And it just so turns out that the network effects on Ethereum and Solana and the Ethereum L2 ecosystem are so expansive. And right now, I think we're even seeing more of a transition where it's not even the chains anymore that are driving distribution. It's the applications. Applications are then building their own chains and owning all of the distribution. So it's such a powerful move, I think, for us to be able to onboard LBTC into places with existing demand out the gates. I think people have thought about this a bit, but no one's really went after it the way we did. It was perfect timing with everything that was happening in the ecosystem. People were interested in kind of like curious about what was happening in the Bitcoin space, but didn't have a catalyst to do it. And we combined, a catalyst in the form of underlying Bitcoin yield with a token that could travel to any ecosystem they would want to take it to. So certainly was something that chains and protocols got really excited about. In fact, I think that Lombard was the first time that many chains and protocols actually had a reason to care about Bitcoin and DeFi. So that was, I think, a powerful moment for the whole industry.
Interesting. I'm taking massive notes over here. We'll unpack some of these. One I want to touch on is I'm a very much a believer too that the application layer is the most important part of the stack currently. Like you need killer apps that pull people in, give them a reason to use it, and the application layer abstracts away as much of the complexity as it can. You know, we're seeing this kind of blend between like the Robin Hoods getting into crypto and the crypto people looking more like TradFi. But a lot of ecosystems still sell ecosystem. Like once you're in, you have all these expensive things you can do with your BTC now.
Totally.
Say more on that because I don't, it's still kind of underrated or under talked about, but I'm very much a believer.
It's interesting. I think the concept of ecosystem is evolving a decent amount. You know, it used to be, ecosystems were related to this idea of like general purpose blockchains where everybody was sort of, we were sort of sitting on the ecosystem itself was sort of like set and forget. Here, I gave you this EVM palette. I gave you like some early hyper demand. Take it and do with it which you will. And now ecosystem development is a much more integrated game than it once was. The general purpose blockchain, the general purpose ecosystem or developer layer is sort of like a dead thesis at this point. It's kind of already been won by maybe one or two or three of the main chains. So anybody else looking to compete in that space better be offering some really serious value to those who are building. I still do think that I actually am very much aligned with your thesis, both in that I think applications are driving the bulk of distribution right now. They're the ones who own the user, who bring in the users. And I also think that the demand going forward is predominantly going to be driven by, or rather, like a lot of value in this space is ultimately going to be captured by the value of permissionless innovation. I think permissionless innovation is the most powerful thing that we have built in this space. You can build on financial applications as easy as it is to build on an API. Like imagine how, I don't think we can even fathom like how crazy this is going to get. It'd be like, when the internet was first created, now you have a permissionless layer for innovation in many ways. People couldn't have even imagined the social media applications and the way that people would ultimately come to interact within that environment. It's the same way with finance. So certainly, there's going to be trillions of value created by just giving people the freedom to build with tooling. The question is, what tooling are you offering as sort of an ecosystem builder? So, I still do think, even though I was saying that Bitcoin L2s sort of aren't a great product right now, nobody wants to build in that isolated ecosystem. I think there is still a great opportunity to build a developer layer for BTC. So I think we're thinking about that a little bit different. But like I said, every ecosystem has to be thinking very, very deeply about what value they're adding to the ecosystem. And the honest truth is that most ecosystems just aren't adding a lot of.
This permissionless innovation thing is interesting. It does make me think, why do you think, when I look at your competitors, especially when you launched, so like Bitcoin L2s and like Bitcoin space was hot, Ordinals was still kind of in the news and whatnot. BitGo's been the kind of like Lindy wrapped Bitcoin. It's on all chains and it has its own set of kind of handcuffs to get onto it. Why do you think that you guys popped off so well at that time? Like what was the kind of like few things in the market that was like, this is great, let's do this?
Yeah, look, we were building on the backs of everything that happened with WBTC and BitGo. So certainly, in nothing but admiration of what they've done. But what I will say is we launched with a much more explosive product in that LBTC had a few percent of embedded yield, or so it seemed at the time. So this was an incredible product to pitch people. I mean, the way to think about it is there were so many Bitcoin users who were waiting on the sidelines, wanted to get involved in on-chain finance, but they never had a catalyst to do it. They never had like a reason to get that excited about it. They needed this form, they needed yield in the form of like persuasion to like, let me take that first step into the world of on-chain finance. And as soon as they did, they were hooked, right? So now, I think yield has died down quite a bit. Incentives are far, far less than what they were at the very beginning. But people still, we launch on a new chain like Solana and go $0 to almost $100 million in a couple weeks with almost no incentives. Like this product, like once people have that, the product that has product market fit is Bitcoin on chain. There's no doubt about that. They just needed a little bit of a boost to do it. So, I think when WBTC was created back. I actually don't remember when it was first created, but certainly when it first became proliferated in DeFi summer 2020, 2021, I had a front row seat to watching a lot of that action. I was at Polychain, VCs just kind of sit around all day and, research the market and stuff. So I was spending a lot of time looking at everything that was happening. I did a full deep dive on Bitcoin DeFi. We ended up investing in a project, BadgerDAO that was sort of trying to bring WBTC and proliferated throughout the ecosystem and whatnot. And there were some good things happening there. But at the end of the day, like WBTC never really reached escape velocity in many ways. It was a primitive that people used to borrow a little bit, but there were high fees on it. It really only existed on the ETH mainnet. It never really made its way to L2s or to Solana or any of these emerging ecosystems. So in a lot of ways, it was the dawn of Bitcoin within DeFi, but it was lackluster. It was sort of no protocol chain, or users were like, jumping out of bed to use WBTC. And so I think LBTC, when we first launched that, gave everybody a reason to get excited out the gate. And we were fortunate to have, I think we were like the fastest growing DeFi token ever, faster than Lido, faster than Ethena, faster than Etherfi. And I think, again, pure admiration for everything they've built. I think we were building on the backs of giants. And I think the fact that the whole ETH ecosystem had just gone through this exact same sort of onboarding phase around like eigenlayer and yield bearing tokens made it such that when we applied the exact same sort of mechanism and strategy that everybody had just seen play out on the institutional side with regard to E3 staking, we reapplied that to Bitcoin, and it was just so stupid simple for people to understand. And because of that, I think we grew just insanely quickly. And yeah, now the name of the game is just hyperscaling that. We went 0 to 1, 0 to 10. Now we're trying to go 10 to 100.
Beautiful. Yeah, that very much tracks to what I'm seeing with that initial kind of hurdle to deploy off of self-custody and go into like DeFi things. There was like a gap before. It just felt a little too far away from self-custody into smart contract yield and that kind of risk. And it does seem like now it's basically table stakes for any ecosystem to have some kind of yield-bearing base asset BTC to then, get people into the ecosystem. And if they want to, they can take on more smart contract risk or, counterparty risk at that point. But they're always going to get, 0.5 or 1 or whatever it is going into that token.
Exactly. Yeah. I think yield-bearing tokens are a great way to sort of prove out demand. It sort of targets, it's an attractive way to target kind of the highest risk audience, the first one to sort of take the initial step to prove something out. And then over time, you're able to get into these, lower yield parameters. So in a lot of ways, a yieldless, Bitcoin wrapper like WBTC that had high fees, this was probably, in many ways, it needed a yield-bearing token to be able to bootstrap to make that market, attractive and able to grow as much as it did. In a vision post we released sometime last year, we basically broke down the sort of growth of Bitcoin DeFi into 3 categories where, phase 1 was just bootstrapping. It was like, we need to think about just how do we get Bitcoin off zero, out of cold wallets and custodians into on-chain finance. And so that was our only focus. If your only focus is that, you build a different product than if you have already proven out fundamental demand for Bitcoin DeFi on-chain, and now you are looking to hyperscale liquidity. So that's kind of where we're at right now. And I think the mistake was people thinking that, we didn't need to think about the bootstrapping case. We just needed to like build this beautiful ecosystem and everybody would come. No, in every sense of the term, a lot of the magic for what we did was we just kind of found the right product, right time, the right thing to pitch to people. And we're able to use that now to build so many other things.
Yep. And then speaking on the yield piece, especially early on, how did you guys think about that? Because nowadays we have, Botanix has like a revenue model where it takes protocol fees from the chain, passes it back to their STBTC token. Solve has one where it uses like a fancy trading strategy and pays back yield. Babylon has been a foundational piece for a lot of these tokens, but that yield has dropped a lot over the years. So yeah, where was the yield source from initially, and has that changed over time?
Yeah, it's a great question. So LBTC, since the beginning, has been exclusively focused on Bitcoin staking. We will broaden this in the next couple months. So we're going to be exploring all kinds of different yield strategies that this will attack. But the reason we went after staking yield to start is because staking was the perfect yield to take this to market. We wanted LBTC to be a broadly applicable DeFi primitive that every chain and DeFi protocol could build upon. And in order to do that, you need to create some sort of risk minimized asset or some sort of like unified asset that everybody can get comfortable around, then the only risk available to Bitcoin holders at that time that met that criteria was staking. The other nice part about staking is that it was the perfect wedge for bringing Bitcoin, on-chain Bitcoin to institutions. Institutions were already very familiar with staking. It's low to no risk. I mean, they've already explored this very, very deeply. There's staking insurance. There's all kinds of this stuff. And they had, like I said, they had just seen this whole game play out with Eigenlayer. So they were sort of ready for all of what was to come. And on top of that, staking is a crypto native risk with crypto native rewards. It's really the only sort of, one of the only crypto native, yield opportunities we have that is just totally different than any other kind of yield opportunity or asset class that exists out there. So very, very sort of a special way to bring this in. And on top of that, this, because of the incentives that were being thrown at Bitcoin staking, it was a very high yield opportunity relative to the risk. So by far the best risk adjusted opportunity. Now, like you said, the sort of Bitcoin security marketplace that was originally set out by Babylon didn't really play out. I don't think there have been any BSNs onboarded. There's still some sort of, slashing is basically zero. There's still some free money being given to Bitcoin stakers, which is nice. So of course, BTC holders should continue to take advantage of that. But I don't think Bitcoin staking is necessarily the end all be all. So I think the ways we're sort of approaching yield is looking at what instos are most comfortable with, thinking about the big money, what sort of integrations will make sense for yield programs and whatnot. And this predominantly comes down to two different categories. One is borrowing stable coins against Bitcoin and letting that be used as a primitive to run delta neutral strategies. This I think is going to become the basis of a lot of yield products. And the second is figuring out how to bridge off-chain yield on-chain. So if you think about why would Bitcoin yield exist in the first place? What do people do with their Bitcoin? Most of it comes from trading. Where does trading happen? Most of it happens on centralized exchanges. So at the end of the day, if you want to create a good Bitcoin yield product that isn't just incentives or sort of artificial yield, which of course will still be good to take advantage of the short term. But when we think about a long-term sustainable product, I think it has to go after one of those two use cases, at least in the short term. My hope is that, and part of what Lombard's trying to create, part of our vision is that the Bitcoin economy, which is in full force off-chain right now, eventually comes on-chain. But in the meantime, we have to be able to access Bitcoin yield and Bitcoin activity wherever it is. My hope is that Bitcoin trading comes on chain, and then you have the sort of foundation of yield generation, which then contributes to borrowing yield, lending yield. Borrowing activity, which creates lending yield, which has all these other sort of integrations that people are using Bitcoin for. In the meantime, we got to work with users where they are, and I think this has been something that Lombard has really focused on since the beginning. I mentioned that I think we talked about, you mentioned a couple different yield sources. I know you have this yield report that dives into the full spectrum of this, and as you can imagine, on Lombard's end, we've done some similar internal research. I think part of the other thing that was great about Lombard's approach in going after Bitcoin staking was we didn't get distracted by anything else that was really happening in the ecosystem. We were only focused on one token and one yield source for the entirety. I mean, that's almost 2 years of a product, right? Now we're starting to branch out into other pieces of infrastructure. And actually, the core focus for Lombard in 2026 is bring everything back. We had LBTC, then we widened out, and now we're just bringing everything back together to focus on just a couple things that we know are going to crush it. We're not really trying to get distracted by too many things that are happening there. So what that means ultimately is within the yield space, I mean, we're going to have high conviction on one or a very small number of opportunities that we're going to go after in full force, and everything.
I guess I'll just call it out. We had some technical difficulties, but we're back. So I have some notes here. I think one question that's interesting. So there's the base yield for LBTC, and as you mentioned, there's different ways you're looking to expand where that comes from and how sustainable that could be, especially with scale, which is one of the hardest questions in yield today. Is what works at 100 BTC breaks apart at 10,000 BTC, especially if you're some treasury is paying for user acquisition at the end of the day, or it's token inflation. But I want to go broader into where are you seeing most people deploy LBTC today? So in the chains that you guys support, where's a lot of the fun and activity happening right now?
Okay, I would say it goes into two places. The most common place you see LBTC deployed is going directly into lending protocols. LBTC is the perfect collateral. It's super capital efficient. You kind of have yield generation natively enabled. So people are using this for liquidity. They are borrowing stables against this to go, farm stablecoin strategies or run delta neutral strategies. So this has obviously been a big hit. The other place this is being deployed to, I would say, is to actively managed vaults. So Lombard runs a couple of these vaults. There's a couple of these that exist in the ecosystem. They are a great way for, retail capital to access more complex strategies. This is the bulk of where they're going. However, I would say that there's a lot of Bitcoin. I feel like Bitcoin yield is still in its nascency in a really big way. In that, like I was talking about before, the core area at which most of Bitcoin yield is generated is still kind of inaccessible. So I think there's a couple other exciting strategies that are kind of on the way. Bitcoin options yield is obviously, I mean, this is like a very core strategy that I think big institutions are very familiar with. They've done this in equity markets. They've done this with their Bitcoin before. You can run this like very low risk. You can parameterize this the entire way, but you can run it in a very low risk way and end up earning a few percent, or you can run it in like a standard or kind of a little bit higher risk way and earn 5, 10, maybe even 15%. There's a vault that was spun up that I don't know that it has a ton of TVL, but it's been performing fantastically. Spun up by the Derive team, who runs an options protocol that basically attempts to sell call options on Bitcoin and pick up some premiums from this. That's been performing fantastic. There's sort of in the process of spinning these vaults up with a couple of the biggest players in the options space. I think it's a big opportunity, at least. Again, maybe not perfect for everyone, but certainly something that big institutional capital I think is at least interested in exploring to some degree, again, with parameterized risk. The other one that's kind of exciting is there's this protocol called yield basis that attempts to remove or maybe mitigate, is a better way of framing the technology, impermanent loss. So as we said before, most of the activity in the Bitcoin space happens from Bitcoin trading. Imagine if there was a way to capture the sort of fees from Bitcoin trading on chain. So I think it's very possible that this kind of strategy could become amazing for passive capital. In fact, I think I don't remember the exact yield, but I want to say something like 10 to 20% APYs have been generated from yield basis so far. So I think there's some interesting opportunities there as well. And a whole suite of other things that I think are in the mix that I'm sure we'll be able to share more information on here soon.
Very cool. Yeah, well, I'm extremely bullish on yield basis. It's one of those things that's hard to cover because it's from the co-founder of Curve, which is a very unique stable swap protocol from the ETH days, and it has these things called vote escrow. It's like the tokenomics work, but they're very delicate. It's almost like hard to reproduce. It's very path dependent. So I think if you try and recreate Curve and yield basis on your own ecosystem, proceed with caution because you're probably not going to be as good as Michael is at these things. But yield basis has been crushing it. They've been doing double-digit APYs across 2 yield paths, token APY and trading APY when Bitcoin's volatile, which is insane with no or minimal and permanent loss. So yeah, I've been watching them closely. You mentioned something about vaults. Vaults seem to be, I think we're in the early days of it being one of the hottest topics this year. And it kind of leads into what you were saying about off-chain trading and where most of the activity is happening, which is that vaults allow you to do both, where you lock BTC, there's some whitelisting permissions, and then they can go do things. The problem on the front end is that if they do those strategies to capture the best yield or have deepest liquidity, at least the way they're currently constructed, there's some trust assumption there. So I guess, how do you see the bleeding edge of that when it comes to people deploying at scale and trusting the vault curators versus off-chain things coming on-chain and this kind of tension?
Yeah, you are correct. I think trust assumptions are involved in these vaults. I think this is where the sort of opportunity presents itself, right? These strategies can be run independently. So a user can deploy their Bitcoin into the Lombard protocol or some other similar wrapper, use that within DeFi to run whatever strategy, sometimes use it off-chain. They're sort of welcome to do that. But for many people, being able to automate that, not only like automate it from a yield generation perspective, but more so, I mean, I think the more important sell here is the risk management. Let's say, in order to generate yield, often you have to run these complex strategies that require, real-time monitoring 24/7, someone to be able to respond to it. There's nothing scarier than putting your money to work, knowing that, something could happen and you might not be there to respond to it. I mean, that's what these folks are experts at. We often don't even think of them as like yield generators. We often call them risk curators because that's what they're doing. They are, they're there to manage risk above all. I think the way that institutions are going to view this, frankly, rather the big money is going to view this, is there are going to be certain institutions they trust and don't trust. And that, Lombard from the beginning, I mean, our goal has been to work with the, most trusted curators in the game, and so, we work with many of them. There's a lot of great curators out there, and I think this goes with all kinds of yield products. It's like at the end of the day, somebody often is managing this yield product or helping facilitate it. You may trust it more or less depending on who that party is. And so I don't necessarily think that these vaults are going to end up being one size fits all. I think there's, we can create a really great product and there'll probably be some power law in how they shape out. But, in a perfect world, I think there's actually many vaults with different sort of trust assumptions, maybe Asia Capital prefers like an Asia-based risk curator that's subject to, laws and regulations that they're comfortable with, and the opposite in the US, where maybe we want somebody US-based to be running the strategy. I think there's like a lot of dynamics like that will play out. So yeah.
Interesting. I want to touch on the institutional piece for a second. I watched a podcast you did maybe a year ago, maybe it was less than that, and you mentioned that you debated in school, and one of the best things it did for you was it allows you to construct really strong arguments. And if I look at the space today, everyone's trying to be institutional focused because that's where the capital is. And I think most of them, when I look at the partnerships they're landing versus you guys, like there's a divide here. Something is getting lost in what they're presenting to the institutions. So when you were initially launching and, you guys gobbled up so much of the early Babylon supply caps. So like you were able to attract BTC in big numbers, and you have this security council or consortium that has some pretty big names on it. So when you guys were going to pitch institutions or some of these big stakers, anything you can kind of like bring into is to either educate people watching this, or like what was some of the pitch that really landed, do you think?
Yeah, well, and to tie this back into the debate point, I think, with debate, everything is an argument. You're sort of coming up with 3 to 4 reasons why something is, either for or against an argument. And building is exactly the same way. Like everything you do, you're sort of, trying to decide whether to go one way or another way, just based on doing a little bit of research and forming an argument, deciding coming to some conclusion. And and one of the most important pieces of that is not forming the 3 arguments on either side, or like deciding like, okay, there's 2 arguments in favor and 1 argument against. It's really, there's only 1 argument that matters at all. So like you can any debate or any discussion, you can ultimately reduce it to like, there's only 1 or 2 things that matter. And, you sort of focus exclusively on those. I think this is what we've done a good job of across the board with building, but specifically with institutions. Institutions have certain things they care about. And if you nail those, then, the rest is history, right? Security, of course, is one of those. Every other conversation was secondary to security. Security is like security and trust. They're multidimensional. It's tech, it's people, it's legal setup, it's I don't know, the vibe or something. There's so many different like ways that people come about deciding what this looks like. Some of it is even like association or like who you're an acquaintance with and stuff like that. And so these are the things that mattered out the gate. And I think when part of the reason we started Lombard was because we identified this opportunity. Of course, the Bitcoin DeFi space is near and dear to my heart, but I won't be, I never really hold back in criticizing it, in that I was an investor for 3 years. We didn't want to touch the Bitcoin DeFi space because it was full of tier 2 and tier 3 teams. I think now there are a number of great teams, right? But even then, you look at the Bitcoin DeFi space, and the quality of teams building here is an order of magnitude below what you see building in ETH DeFi and around stablecoins and Solana DeFi. So we've got a long way to go. But for Lombard, I mean, that presented a huge opportunity, right? So we wanted to step in and be a bit of a leader in the space. We were probably the first Bitcoin DeFi company to talk to a lot of these institutions and speak their language. So, that was what helped get us up off the ground. And I think that's why, we continue to win deals today.
Beautiful. Beautiful. Yeah, it's interesting. Like the chasm, even the security consortium idea, like to the maximalist is like, no way. Doesn't fit the ethos. But to the institutions, that's known counterparties that I can then vet and audit is like the norm.
Yeah. 100%. Yeah. And, we weren't the first person to like come up with the consortium idea. I mean, there was like a rootstock consortium. And, there were different forms of this, but I think the nature of the types of parties that we were able to rally around this protocol were, well better or had much better distribution, I suppose, in terms of brand name to be able to bootstrap that trust. And, my vision for the consortium originally was that this was going to become the unified source of trust within the Bitcoin ecosystem. And I don't think it fulfilled that entire goal. Like, it did a really great job of helping us get to a few $1 billion in TVL, but I think there's room to even improve on that sort of trust infrastructure. The most important part here is that the consortium was a much, much better root of trust for onboarding institutional Bitcoin capital than relying all of that on the team. Like, trust the Lombard team, or trust, pick your other favorite Bitcoin LST, Bitcoin wrapper team. That is sort of a non-starter for a lot of these folks.
Yep, that makes
sense. And I will say, the next level from this is where the game's kind of going, is not even trust, you don't want to trust the Lombard team. You want to trust like a consortium type entity. You might not even want to trust the consortium, or maybe you trust the consortium for some things, but the other part of security, of course, is the tech. And what is the most battle tested? This is like something that Bitcoin DeFi, I think, recognizes now, but it took a really long time for them to just sort of come to their senses on this. Was like, the most battle tested tech in all of all of Bitcoin is centralized custodians. It's Coinbase custody, it's Anchorage, it's Fireblocks, it's stuff like this. So if there's not a great way for the product to integrate directly within those sources of technology, it's going to be very hard for some of this Bitcoin to move. So, I mean, we onboarded a lot of Bitcoin, but let me tell you, there is a ton of Bitcoin that we have been close to onboarding or haven't been able to onboard. So, the pipeline is order of magnitudes larger than what's been closed right now.
Interesting. All right, we've been going for 40-ish minutes. I want to do some rapid fire on some of the news things that you've dropped in the past few months, which kind of goes into, pitching the right people, landing the deal. First one, BTC.b, which I remember when that came out, being able to send BTC in a permissionless way across chains, super enticing. I think when you guys acquired it, it was like a half a billion in BTC, which is, first of all, very unique to do some kind of acquisition like that. Say a little bit about the BTC.b acquisition and how does that fit into the narrative?
Yeah, this is a fun one. Good timing, because I think the full transition is going to be completed here within the next few days. BTC.b was just sort of a unique opportunity. We were looking to get into the Bitcoin wrapper space, recognizing that LBTC, while it's a great collateral, sort of capital efficient collateral for people to use in the ecosystem, it was limited in its use cases. People don't trade Bitcoin LSTs. Sorry, people don't trade LSTs. They don't like yield bearing tokens. Don't get used for payments. Again, they're great as collateral, but not so good for many different use cases. Additionally, some people just don't want to take on slashing risk. They want to use Bitcoin, or they want to use ETH or some other asset. They just don't want it in the yield bearing context. So the launching a Bitcoin wrapper is just a much cleaner way for us to attack all of the different use cases for Bitcoin we wanted to. We'll always have LBTC as a sort of sidekick there, and I think it'll be a great product that people will continue to use. But we wanted to be able to offer both. And after all, like the Lombard infrastructure, building a yield-bearing Bitcoin was actually extra steps. We could just eliminate that extra step and we'd have a Bitcoin wrapper. So we were looking to get into the game anyway. Avalanche, we got in touch with the Avalanche folks. They had launched this Bitcoin wrapper, arguably, one of the most successful Bitcoin wrappers out there. I think it was like, I don't know, top 5 in terms of TVL. And it had been a little bit, I think they had some of the realest Bitcoin integrations in all the ecosystem. On Avalanche, there is only one Bitcoin effectively, and it is BTC.b. It's integrated within all the top applications, Aave, GMX, whatever. And, we had the opportunity to kind of come in and basically we realized that there was massive mutual benefit to us working together on this. They had seen the asset stagnated. They wanted to see the vision that they had for that asset come to fruition. And we were looking to get up off the ground. So this was an awesome way for us to sort of collaborate and not have to start from zero. We started with day one Aave integration. We started with a ton of TVL. We started with like a history that I think is kind of important to any asset that's trying to get up off the ground. Yeah, you'll see much more of this over the next few months. It'll be the exclusive Bitcoin within a number of chains, including Mega ETH, which is getting ready to do their full mainnet launch, which is exciting. And like I said before, last thing on this is LBTC is great, but there's so many use cases for Bitcoin wrappers that we're excited to integrate. And frankly, like what I really want is for Bitcoin, like Lombard's Bitcoin infrastructure, to be viewed on par with native Bitcoin. People should move their Bitcoin off of Bitcoin L1 into on-chain world, into ETH, into Solana, into some of these other chains, and it's probably never going to leave there. And with that in mind, you need to be able to, applications need to be able to call this native Bitcoin. They can't call it LBTC, CBBTC, red colors, blue colors, green colors, yellow. It needs to just be the orange coin in the interface. This is what users are going to do. I say this every now and then, and a little bit facetiously, but it's like the best application in all of Bitcoin DeFi is Hyperliquid, and people don't appreciate this. They spun up a 2 or 3 multi-sig. They called it Bitcoin on the front end, and users loved it, right? So this is like where we're headed. I don't think the end state of Bitcoin DeFi is a 2 or 3 multi-sig. I hope we have much better security than that. I know institutions aren't going to get on board with that, but that user experience is what we're aiming for. So acquiring BTC.b and working closely with them to distribute that was sort of the impetus for all of that.
All right. Next up, Ledger. This was a big one, and I don't think people realize, like, first of all, the amount of capital that's locked on Ledger hardware wallets that people just trust is absolutely massive.
Crazy.
And more importantly, if you're in DeFi, like being connected to Ledger Live unlocks so much capital just by being, on their integration marketplace. So talk about that, because that's a huge landing that I think people are kind of sleeping on.
Yeah, you nailed it. I knew that Ledger was big in terms of capital accumulation. I think they throw around some stat like 22% of all Bitcoin is stored on ledgers. That's just insane. Goal, of course, is to be as close to the native Bitcoin as possible, such that we can be the infrastructure that facilitates the onboarding into on-chain finance. Obviously, we've gone around and talked to a lot of these LPs, but I can only talk to so many people at a time. Ledger being able to talk to 1/5 of all Bitcoin instantly is pretty crazy. So the Ledger Live app is such an incredible. I mean, I don't think there's a greater opportunity. There might not be a greater opportunity within crypto to to distribute capital on chain into yield sources, into different on chain products. So yeah, that one was in the works for a long, long time. Those guys take security more seriously than anybody else on the planet, it seems. And yeah, real privilege to have been able to work with them. And like I said, I mean, man, if I wasn't working on Lombard and I had to go work on something else, it would be like a really cool opportunity to go work within the Ledger team to try to productize that app. Because I do think, Ledger Live's success, I think, has been probably not what they wanted so far. And so I think there's so much opportunity for growth in that. Just perfect positioning for that kind of application. And we were talking earlier about how apps are starting to own the distribution. Applications are like where everything's happening. So yeah, fun. I'm sure working at Ledger right now is pretty fun.
Yeah. Okay, and then last one, start to close this down a little bit, that you guys announced. This one's recent, is the Lombard SDK, and is it called Bitcoin Connect? So
Bitcoin Connect. Yep. So we started this discussing Bitcoin L2s, and I still do, like I said, I still very much feel that permissionless innovation on Bitcoin is such a big opportunity. In fact, one of the things I often say is I believe that there will be net new innovations coming out of the Bitcoin ecosystem. If you build a great developer layer for building with Bitcoin, you will see, we'll revolutionize the Bitcoin developer community in ways we hadn't before. You talked at the very beginning about how like ordinals and inscriptions and like, BRC20s have kind of, started to initially rally the ecosystem. People got like a little bit frisky with on-chain finance, and now we're excited about this. I mean, that was just the start. Now imagine where that can go many years down the road. I mean, my hope is that some of the next greatest innovations in crypto, like the next eigenlayers, the next Celestias, the next, I don't know, Etherfis come out of the Bitcoin community, or at least I think that there's a lot of dormant developer demand that will come from there. We've wanted to build a Bitcoin developer platform. We just built it differently than everybody else. I said in a tweet that Lombard's Bitcoin Connect is what Bitcoin L2s always should have been, rather than building isolated ecosystems just for Bitcoin or like walled off from the rest of the world. We allow anybody to build with Bitcoin wherever they are, on any chain, on any application, leveraging on-chain and off-chain infrastructure. I mean, the goal here is basically to like broaden, step back a little bit more and just say like, what do you want to build with Bitcoin, and how can we add as much value to you guys through the platform? So we not only have built SDKs to be able to leverage the Lombard bridge in any ecosystem, we have yield primitives built in, we'll have borrowing primitives built in, we'll have trading primitives built in. We have automations that allow for like fast minting or fast bridging across chains. All of these different like challenges that someone would have with Bitcoin, we're going to build into this developer ecosystem, compared to just a plain boring EVM palette that sits there and does nothing. So I think this is sort of how we've been thinking about it. And I'd say we're early, of course, in the process of bootstrapping the developer community, but I think there'll be really powerful things that are built from this. The vision for what this becomes is that a user goes to an application, they are using Bitcoin, they deposit Bitcoin to the app, they trade with it, they borrow against it, they do all of this on chain, and they don't even know it's there. All of this is under the hood, leveraging on, Lombard's infrastructure. And, at this point, it's like you can be a fintech app or something like this, not know anything about on-chain finance, and just leverage our SDKs and APIs to build beautiful Bitcoin experiences.
Very cool. Yeah, I'm excited for this because for too long, crypto was like it's in its own kind of walled garden, and so the competition was your competition, and like
Yeah,
the bar was kind of low. Versus in the Web 2 world, it's like it's users, users, users. Who has the best product? Full stop, and the competition is
yeah,
crazy. And in the fintech
yeah.
space, it's extremely competitive. So I like crypto getting more into that space. I think it's hopefully going to rally everyone to, be more aggressive and more focused on the user. But first, you need tools like these to abstract away complexity so you can just build the applications.
Yeah, I actually love how you framed that. We spent all these years trying to convince people that crypto was the future. Now everyone believes it, and crypto is about to become just as competitive as the fintech space. So
Yep.
whether we like it or not, we've got our chops cut out for us.
Yeah. Okay. Last couple questions. You guys are focused. You've proven the model. You have lots of TBL. You've mentioned a few times about now the focus is on developers are one, but scaling. What's the
Yeah.
What's some of the biggest headaches or like blockers to scale that you've identified so far?
Most of what we're focused on at the moment is broadening distribution. So we have narrowed our focus down to just a couple different use cases with Bitcoin that we know are going to crush it. We sort of spent all of 2025 building out the infrastructure. So I talked about how we went from one asset LBTC to like building out this full stack. The full stack, unfortunately, was a distraction on the BD side. But like now that we have the entire stack, there's many different ways to sell this to folks, and honestly, it becomes like the perfect product integration for what we're ultimately trying to create. And the sales process right now is extremely focused on this idea of the DeFi mullet, like I was just describing, an application that has DeFi on the back end, but looks and feels exactly like a centralized finance app or any other fintech they would expect to see. So, we're working with some of the biggest exchanges, fintechs, and, predominantly custodians to be able to set up this infrastructure so that anybody can build with Bitcoin really easily. I think the entire market structure of crypto is changing, like we were just discussing. It used to be all crypto natives and retail. Now, the next 12 to 24 months is going to be all about institutions and fintechs. So we are, thankfully, all the infrastructure we built in 2025 was perfectly targeted for that. And now, we're just taking this thing to market like crazy. Yeah. Native custody integrations. We have a new sort of like trustless path for minting BTC.b that's going to come out. That's going to be a huge hit. We are spending a lot of time focused on the developer platform, integrating this natively into any and all applications. And yeah, just doubling down on what's been working in Bitcoin DeFi and what's been working for Lombard. So yeah, it's going to be a fun one for sure.
Exciting times, exciting times. All right. Well, I got no other questions. This has been a fantastic rip with you. So appreciate you coming on. Any closing thoughts or things you want to leave for the audience as we bring this to a close?
I don't think so. Just yeah, thanks for having me on. Pleasure to be here. Really an admiration. I think of the work that you've been doing. The Bitcoin Yield Report was awesome, and I think like I said, I think I'm a little bit critical of like what's been seen within the rather what's been built within the Bitcoin DeFi space over the years. But it's in such a great place right now. There couldn't be more momentum behind this. And when I look out at the space, it's crazy that more people don't get excited. Bitcoin is a $2 trillion asset today. When it is on par with gold, it's going to be 25 or a $50 billion asset. Without a doubt, in the coming years, let's say next 3 to 5 to 7, whatever, $1 trillion in Bitcoin is going to come on chain. Why more people aren't focusing on that opportunity is kind of insane to me. But I think all of us who are here early, excited about this, are going to be rewarded handsomely. Cool to be building alongside you.
Could not agree more. I'm not even going to add anything. I'm just going to let that linger. Appreciate you coming on. This has been fantastic.
Definitely. Thanks for having me, Jacob.